The decision by the French president and UK Prime Minister to call elections has backfired. Our guest says the success so far of the far right in the French election is an overstated risk. He's also predicting a GOP, a Republican sweep in the US elections in the White House and in Congress. We're joined by Marko Papic, chief strategist at BCA Research. Thanks very much for coming on. The French election, of course, not fully decided yet, but it looks as though the far right making major progress.
Yes, they're going to have the best electoral outcome they've ever had, but I wouldn't really call them far right anymore. You know, across Europe, other than one or two parties, most of what we would call far right parties have really migrated to the center. Everyone's modeling themselves after Giorgia Meloni and Fratelli d'Italia in Italy, who have effectively been very anti-immigrant. So on that part, they remain anti-populist. But for the most part, on fiscal matters and even on foreign policy, they've been quite centrist. And that's why I think the market has paid a little bit too much attention to the French election.
Yeah, it's interesting. I mean, Bloomberg argues that Marine Le Pen, the right-wing leader in France, has dumped the overt racism of her father, Jean-Marie Le Pen. So they've moved away from some of the extreme positions.
But, you know, that happened many years ago. Yeah. I think more relevant for the markets is that she also dumped, after her defeat in 2017, a particular brand of Euroscepticism that really scared the median French voter, who still to this day supports European integration at 74%. So why is that important for an international bond investor? It's important because it means that there's still this supranational structure, a constraint mechanism, that will force Paris, Rome, Lisbon, to abide by the fiscal rules as long as European voters basically want to stay in the euro area and in the EU. And there's just nothing that Marine Le Pen can really do about that if she wants to stay in power and continue winning elections, other than abide by that sort of decision by the median voter to continue supporting European integration. And that's why I think that investors, they often look at Europe and say, well, there's this risk of euro area collapse. I think the risk of that is extremely low. That's a solved problem. We solved that almost a decade ago with the sovereign debt crisis. And in fact, European integration and institutions create constraints on silly fiscal policies. And we don't have those constraints on these shores, especially in the US.
Well, that's interesting. A move to the US, you are concerned about the US debt position, for example.
Well, I mean, look, am I concerned? I think it doesn't really matter what I think, it's what the bond market thinks. But let's just put it this way. If the bond market had a mini riot about France, let's do the math here. France actually has a budget deficit that's 2 percentage points of GDP smaller than that of the US. French debt to GDP is much better than the US as well. And the trajectory of the two countries in terms of budget deficits and debts is diametrically different. Finally, France pays a third of what the US pays to service its debt. So given those mathematical realities, what I would say is that if any party in the United States of America, it's not GOP, it's not just about Republicans, even the Democrats, but the likelihood is higher with the Republicans. If any party wins both the White House and Congress, the risk for bond market is that there's no constraints to more profligate spending, to more higher fiscal outlays. And I think the bond market will have to do something about that. And the problem and the risk to equities, of course, is that bond yields and equities have been inversely correlated. So bond prices and equities are positively correlated. And the problem is that if you start having higher yields at a time when the economy is slowing down, that will obviously increase borrowing costs at the wrong time. And I think that that's not something that equities want to see. And I don't think that's what bond investors want to see either.
Sorry, when you say the French pay much less to service their debt, you mean the interest rate on French bonds or the equivalent bonds to the States much lower?
I mean, the payments on interest on French debt are a third of how much the US government has to pay. So not just the yield. The yield itself is not sufficient. It's also maturity levels, the average length of the maturity of the average maturity. So France pays, in terms of government outlays, a third of what the US pays.
Okay. Talk to us briefly about Britain. Stocks went up initially after Labour's sweeping victory. There's a perception that Britain has a lot of economic problems, crumbling infrastructure, and a moribund planning process.
You know, I think with the UK, this was very much well telegraphed. So there's nothing really to discern from the election outcome that the market didn't expect. The other issue that I think is important is that United Kingdom already had a mini bond market riot. And that's a very important point. If you remember when Liz Truss proposed a budget, right? Okay, so that's why I think that Keir Starmer and the Labour Party is going to be held in check by that experience. And so I don't foresee any sort of a risk off because of what happened in the election. To me, the concern with the United Kingdom is more longer term. And that's that you have this incredible, huge majority, historic really, for the Labour Party. But if you look at their share of the vote, it's actually the same as in the last election, and it's lower than in 2017, which wasn't that long ago. So this is really an outcome of the UK's first past the post electoral system, where a share of the vote basically led to this huge seat majority. And the reason that's a risk is because there is a potential for the Labour Party to become intoxicated with its majority and then start to rule from far more left wing than the electorate actually is. And so that's something to watch. We need to watch to what extent is, the Prime Minister's office cognizant of these things and kind of pushes the Labour Party back to the center, which they've done so far in the campaign. And I think they will going forward, but I'm just flagging this as a risk to me.
I mean, they have said, Labour in Britain have said, we're not going to raise corporate taxes, for example. Apparently, yes. Britain, for decades, has suffered from low investment, especially by the private sector.
Well, I think one thing that I would say is on the fiscal issues, so far, Labour Party has said everything right. And again, I think that experience under Liz Truss, they've tasted what a bond market riot feels like, which for most developed market economies is something that hasn't happened in basically 30 years. The UK has had that experience. They know what it feels like. They don't want to repeat it. So that's a positive. But the investment point is very important. I mean, what's the long-term case for the United Kingdom now that it's out of the EU? The Tories made a pitch ahead of Brexit that they were going to become Singapore of Europe, which of course is, quite frankly, a ludicrous notion for a number of reasons. It's quite unlikely that the Labour Party is going to turn the United Kingdom into the Singapore of Europe. So we'll have to see what the pitch is. A good bellwether is actually this trade deal with Canada. That might be a very good bellwether of how laissez-faire, how globalist is the Labour Party going to be. The Tories, of course, paused the negotiations of the free trade deal with Canada ahead of the election, perhaps to buy some votes. I'm not quite sure. We'll see what the Labour Party does. But I think that the more that the United Kingdom can open up to the global economy, I think it will be actually better, because I don't see them having any advantages in remaining a closed economy.
Yeah, that's interesting. Britain walked away, and it was rather embarrassing, arguably, for the Tories, because they said, well, we can strike trade deals outside Europe. Of course, dairy, the perennial problem, seems to have been one of the sticking points there. I could talk to you all day, but just before we let you go, Marko, you do see the prospects for a Republican sweep in the elections this year in the United States. We're tight for time, I'm sorry.
Yeah, no problem. I mean, all I would say is that after the disastrous debate, Joe Biden's probability collapsed, but there still seems to be like a glass ceiling, like a cap on Trump. And I think this is a big mistake. I think most establishment commentators just don't want to give Trump, I think, the due that he deserves in terms of his performance in the polling. And so I think that's a mistake. I think that people are still underestimating Trump's performance, and there's this hope that a Biden replacement will somehow save the day. I don't see that happening, especially not with the candidates that are being floated about as the likely replacements for Biden, if that were to happen. So I think that where the market needs to start pricing in is not just lower probability of Biden, but higher probability of Trump, and that would lead to that GOP sweep.